What's up, money lovers? Welcome back. So, Symbotic stock has been a fascinating company to both study and invest in over the last couple of years, as it quickly went from somewhere around $10 or around 10 when it IPO'd to over $63 at the high, and now it's kind of settling somewhere in between. So, here is a summary of the company if you don't already know from my bajillion videos that I've made on it here. I'll let you guys pause the screen and read this if you want, but it's essentially just a warehouse automation company. They got some tailwinds definitely from this whole AI boom, but it has definitely been a volatile ride for Symbotic, which, just in the run up to earnings last week, we saw the stock go up 20% leading up to earnings, then tank over 20% the day after earnings, and in the time since gone back up over 20% to be almost back to where it was just about a week ago. So here's a visual. This little 1 month chart here shows you the roller coaster ride that Symbotic has been. So it's been very interesting. And while long term, I am still bullish on this company. Short term, I think there are some potentially big issues emerging. And so let's just get right into it. Let's start with the valuation. Now, there's many ways to value a company, but since Symbotic is not yet profitable, I elect to use the price to sales ratio. And just to give some context, Tesla, their price to sales ratio is currently around 7, and many feel that company is incredibly overvalued. Well, if Tesla is overvalued at a price to sales of 7, then Symbotic is definitely overvalued at a price to sales of around 20. Okay, so why is it valued so high? Well, what's maintaining the company's astronomical valuation, as you can see in my little chart here, as you can see, I've been covering this company for quite some time. Got my spreadsheet going all the way back to Q4 of 2021 when the stock was under $10. But so what's been maintaining this company's astronomical valuation has been its astronomical growth rates, which if we just go back to this first column on the right, Q1 2023, you can see the company grew 168% that quarter. So in 2023, it was routinely putting up these triple-digit percentage growth rates, 168% in Q1, 177% in Q2. But the growth rates now are starting to seem to be steadily declining, right? In Q3 of 2023, that was down to 78%, Q4, 60%. Q1 24, we just got a slight bump up to 80%, but the company for Q2 has projected around 50% growth. So again, these are phenomenal growth rates, right? I'm not knocking them, but they're clearly trending down. And what got this company valued sky high was these, triple digit percentage growth rates. And you can even just kind of see, looking at the stock chart here, to reflect that, it kind of hit its peak back in November where I think it got over $60. Let's see, 52-week high, yeah, $64. Then it, $57. Then it was 57 again, then 56, and then the recent high was only 50. So you can kind of see already it's kind of in this downtrend. And again, I think it's corresponding to this and a few other things. Now, if you guys are enjoying this video, consider signing up for the Investment Club community, where you get access to a bunch of perks, including access to all of my stock and options trades, a community that already has 7-figure stock and real estate investors in there that you can network with, exclusive group calls, our first of which is going to be this Wednesday. And I share all my trades there in real time. So here's a little screenshot. Last week you can see I made $2,048.42 mainly off options trades, and I'm putting all those trades in the community. So if you're interested, you can sign up for that community. You can sign up for my Substack. I have free articles over there. And if you want access for the community, you can sign up for the paid option. Right now, it's $15 a month. If you sign up for the next year, you get 1 month free, and you'll lock in at this price for life. So the price will stay the same when I raise the prices in the future. And so here's just some screenshots to give you an idea of what you can expect. Our first group call is this Wednesday at 10 a.m. We'll be talking about options trading. And here you can just see kind of what the Discord community looks like. We've got designated stock channels. We've got a channel for real estate investing on business and taxes. So we're doing a little bit of everything. I really want this to be a place for people to network, learn, grow, and share their investing ideas. So if you want to sign up, you can click the link to my Substack in the description below. Again, the Substack is free. If you want community access, you sign up for paid. All right, so back to Symbotic here. All right, so with Symbotic, we've got these declining revenue rates. Now, still putting up phenomenal growth rates, but the growth rate is clearly trending down, and I think that's a big part of why the stock price is kind of trending down. So while these are phenomenal growth rates, it's just impossible to keep this going forever, right? These and declining growth rates are clearly not going to support the valuation, and we've kind of seen this play out with Tesla over the last couple of years too. They said they were going to grow at 50% in perpetuity, but it's just not possible at a certain point. It gets extremely difficult. So that's one of the big issues. Now, things could change with that. We obviously have the Greenbox joint venture with SoftBank. That could take off. They've got these innovative products like BreakPack. We've discussed all these in previous videos. These could start to contribute meaningfully as well. But so far, these things haven't happened, not to scale at least. It appears, Greenbox revenue may start to appear toward the end of Q4, the end of 2024. But in the meantime, the company still has a massive revenue backlog, as you can see, of it's still around this $23 billion mark. I didn't update it, but it's around $23 billion still as the latest quarter. So they're going to have to deliver against that, right? They're going to have to work through that, and they're going to have to balance delivering on those orders with continued new customer acquisition and growth. And, they've been targeting adding 1 to 2 new customers a year here. So the other frightening thing I'm seeing, if I pull up their earnings here, the other very frightening thing I'm seeing is share dilution, very high share dilution. Now, share dilution, we're up 43% here in the amount of shares outstanding, 58 million of the Class A common stock a year ago, 83 million in the most recent quarter. This is a little frightening to me. Basically as investors, we would like to see 3 things, or at least progress in the direction of 1, dilution being greatly reduced, getting back to those higher growth rates, and profitability. And while the company is getting closer to profitability, right, their net loss is decreasing. That they're making good progress on. Year over year, they went from losing 68 million. Most recent quarter only lost 13 million, and EPS was only -2 cents, which has been trending down. So there are some positives, but the other 2 parts, the growth rate and the dilution, are moving in the wrong direction. While long-term, I do like Symbotic. It seems like a great innovative company in a growing industry. Short-term, I am scared. I feel a bit like Luke Skywalker right now. I've seen this power once before. It didn't scare me enough then. It does now, because it's like deja vu here. I'm going through seemingly the exact same cycle that happened with one of my other investments, a company called Palantir. They went public a few years ago. Pull up the chart here. Actually, I already have it. So Palantir went public a few years ago, and you can see, it was also an under $10 stock. It went all the way up above 40, and then it was basically in no man's land, came all the way back down to below 10, where it sat until, really 2023, not too long ago. So if we just look at the 2 stock charts together here, it's looking eerily similar. As you can see, maybe it looks better if I reverse them. I've just got a bad feeling that where Symbotic is currently is where Palantir was in this era, and you're going to see a reset. If Symbotic's, growth rates continue to diminish and they continue to dilute, I just think that this is the logical continuation that you could possibly see here. Again, long term, I do think, I really like the company. Nothing's changed, but I do think there's a possibility that, we get a little reset here. Now that could change, right? They could stop diluting, they could fix the growth rates, but if they don't stop these things, if these things continue, I think there's a high chance this company is going to behave a lot like Palantir, which also, Palantir only really started coming back. Again, they had the AI boom, but their revenue did start to pick up a little bit again. So, things are just cyclical. It's nothing bad long term, I don't think. So they seem to follow the same trajectory of going public, having this massive growth at first, but then after a few quarters, growth started to slow, share dilution started to go up. And so Palantir in a little over a year went from $8 to $40 and all the way back down to 8. And it only recently recovered in large part thanks to this artificial intelligence and AI boom. Whether that continues to be a boom or turns out to be a bust remains to be seen. But that has also greatly benefited Symbotic. This is the whole AI thing has been a huge tailwind for Symbotic. There's no denying that. That's definitely been part of this, insane run up that we've seen happen here. So, and we can already see, again, Symbotic just seems to be kind of like topping out here. So we'll see what happens there. So having studied, both these companies for years, I'm now recognizing what I think is a similar cycle. Markets are cyclical, right? This could change. Symbotic could reverse the trend any quarter, but I just think it's definitely something worth keeping an eye on. So if you enjoyed the video, don't forget to like, subscribe, and I look forward to hearing your thoughts in the comments below. This is Vinny from the Investment Club. I'll see you guys next time.